Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on the weekly time frame, starting with the very bullish scenario where we are looking for a double 1-2 and eventually expect a bigger wave 3 to the upside towards 100k. In this scenario, the wave 2 here retraced to the 0.382 Fibonacci taken from the low to the high of wave 1, a less common target for a wave 2, a bit more common for a wave B, but a target for a wave 2 nonetheless. Then we are looking at this second wave 1, the green count here, and the green count is a lower degree Elliott wave count. In yellow we have a wave 1, 2, 3, 4, 5, and inside this wave 3 we are looking for the green count in another 1, 2, 3, 4, 5 impulsive structure to finish the yellow wave 3. That means that this wave 1 and this wave 2 are a lower degree Elliott wave count compared to the first 1, 2. So preferably the second wave 1 and the second wave 2 are shorter in price and time compared to the first wave 1 and the first wave 2. Now you can see this second wave 1 to the upside here is longer in price compared to the first wave 1. This is a trend-based fib extension, the 1-to-1 taken from the low to the high to the low over here, comparing the yellow wave 1 with the green wave 1. And as you can see, the green wave 1 easily passed the 1-to-1. Only if I go to the logarithmic chart will you see that the second wave 1 in green did actually not yet touch this trend-based fib extension 1-to-1. However, the problem with the logarithmic chart is that then wave 2 does not even hit the 0.382, and not hitting the 0.382 for wave 2 is extremely rare, never preferred, and therefore the linear chart is the better option over here. What is good about this second leg to the upside here is that it is shorter in time compared to the first wave 1, so that is positive. Now if we are then looking for a retracement to the downside in a wave 2, the common target for a wave 2 is between the 0.5 and the 786 taken from the low to the high of this wave 1. The 0.382 is a less common target for a wave 2, and as you can see we already hit the 0.382. However, we made this low before the vertical lines over here. These vertical lines are fib times taken from the low of this wave 2 to the high of this wave 1, comparing this wave 1 to the upside with the corrective wave 2. By far most commonly, a corrective structure is finishing at least after the 0.382 fib time of its impulse to the upside, and the 0.382 is sitting on the 19th of February 2024. So preferably we see another low to the downside inside the common target area after the 19th of February this year, before we're then going to be looking for a continuation to the upside. Now this scenario also worked quite nicely with this volume profile. We have a big volume profile over here, a couple of them of the year of 2021 and the beginning of 2022. And you can see that at the lower end of this volume profile, we had support, resistance, the value area low here at 30.6k, and the big support resistance area. Once we passed this area and closed a weekly candle inside, probabilities increase to move to the point of control. Once we clear the point of control, probabilities increase to move to the value area high, which is what we hit over here. Besides the value area high, we also here had the golden pocket taken from the high to the low, which therefore was a nice and interesting resistance area for a rejection, and the news of the ETF was just perfect timing into resistance for a move to the downside, where then the point of control over here is acting as support. However, as mentioned in this scenario, preferably we're going to see lower prices and potentially retest the lower end of this range over here, resistance, potentially then flipping into support before continuation to the upside. In the second bullish scenario on the weekly time frame, we are looking for a wave 1, 2, 3, 4 and 5. So in this scenario we have a bigger wave 1 followed by a bigger wave 2 before continuation to the upside in a wave 3. What lowers the probabilities for this scenario is the amount of time it takes to form this structure to the upside, because this is then a bigger wave 1 followed by 2 and 3. But here This was also a wave 1 followed by 2 and then a bigger 3. But look how short this wave 1 is in comparison to what we have over here. So that lowers the probabilities of this scenario, but it is an interesting scenario nonetheless to take this high over here, move above 50k, make everyone very greedy, think about all-time highs, think about 100k, and then reverse it back towards the downside. I think that the psychology element of this scenario is very, very attractive. Now in this scenario, we are then looking for a wave 4. Common target in wave 4 is the 0.382 to the 0.5 taken from the low to the high, 39.8k to 37k, and the invalidation is the 0.618 at 34.1k. Preferably, this wave 4 is ending after the 0.382 fib time taken from the high of 1 to the low of 2 to the high of 3, comparing wave 2 in time with 4 in time. The 382 is sitting on the 4th of March 2024. Now, because this wave 2 was a very shallow 0.382 retracement, long and a complex structure, probabilities increase for wave 4 to be a more simple structure, deep and short in time, but still preferably the 0.382 is passed. Also, this scenario works very nicely with the range. Move to the point of control area, right? Move outside of the range, have a fake out before moving back in. Probabilities from an Elliott Wave point of view are simply not great to just do this and look for all-time highs directly. It's much better for price to stay in this range for a little bit of time throughout 2024 before choosing a direction. For the third bullish scenario, I have to go to the daily time frame where we are looking at this recent impulse to the upside over here, where we are looking for a wave 4 that is finished and another wave 5 to the upside to finish a 5-wave impulsive structure. The main reason why this scenario has lower probabilities, besides the structures over here in the end for a wave 5 and 3, is because of time. As wave 3 is very, very extended in yellow, the relationship between a wave 1 and a wave 5 is usually around the 0.618 to the 1.618 in both price and time. But as you can see, this is a fib time taken from the low to the high of wave 1, put at the low of this wave 4. We already passed the 1-to-1 and we're not even close to putting in a high for a wave 5. It remains a scenario that we keep an eye on, as locally we are looking for a bit of at least a 3-wave structure, and in this scenario you want to see continuation, and in other scenarios we want price to move to the downside and take this low, which also is the invalidation for this scenario. If we go to the monthly time frame, then you will see a monthly gap over here that we touched for the second time, and that is very interesting. So we have the all-time high monthly candle, bigger move to the downside, and then we started ranging here, creating a gap on the monthly chart. We hit the gap once, rejected to the downside, and now we hit it for a second time. If price can come back to this level here, probabilities are very high. We are going to fill this gap to the upside to 53.3k. So what we are generally looking for is still a deeper retracement on price, either in a structure like this where we do not take the high and look for lower lows to be made, or we do take the high once more and then look for a deeper retracement to the downside, where we got to keep an eye on the high of the monthly gap at 53.3k, which is a very interesting resistance. And of course, also in the bearish scenario, we would be looking for price to move towards the downside, as we're looking for an ABC to the upside. Wave B common target is the 382. Common target for wave C is where we are ranging at the moment. And also time-wise, this being the potential high of a wave C works absolutely fine. Between the 0.618 and the 1.618 is a common target for wave C versus wave A. Fib times taken from the low to the high of A to the low of wave B. So if we then have a look at the probabilities, then what we are pretty much looking for are the dotted lines over here, right? So we are still looking for a deeper retracement to the downside, either directly in the yellow dotted line here, or taking the high one more time and then look for a deeper retracement. Of course, this is something that we constantly observe with the lower time frame updates that I post throughout the day. With the information that we have at the moment, the yellow line has the highest probability here. But if you want to know more about the more local scenarios and probabilities on the lower time frames here, make sure to check out the previous video and click on the card at the right top, as that will link you to that previous video. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.